If you're a Capital One or Discover customer, you're going to want to listen up because this next story affects you.
Capital One officially took over Discover this past Sunday. And while the headlines may make it sound like just another business deal, this could directly affect your wallet. If you own a Capital One or Discover credit card, or even if you plan on applying for one this year, this merger could change how you earn rewards, how you're approved, what your credit limit may be, and how much interest you're going to pay as well.
If you have a Capital One card, this could impact.
Let's talk about the 5 things you absolutely need to know before this new era in credit cards catches you off guard. Number 1. Discover is no longer independent. Let's start with the biggest shift in all of this. Discover is now under Capital One. This means that Capital One now controls all Discover credit card products. The Discover Bank brand, which also includes mortgages, savings accounts, and of course, the Discover payment network as well.
If you're a Capital One or Discover customer, you're going to want to listen up because this next story affects you. That deal is likely to make Capital One the 3rd largest credit card lender in America, jumping up ahead of Citi, but still well behind JP Morgan Chase and American Express. What does all of this actually mean for you? CBS News Money Watch correspondent Kelly O'Grady is here with some answers. Kelly, good morning. The companies want this. Is it good for customers?
If you were enjoying Discover's flexible 5% cash back categories, don't be surprised if Capital One slowly starts phasing them out, or they may even change how they work altogether. Now, this isn't just a buyout, okay? This is full absorption. And when that happens, product features and customer service often start to reflect the parent company. So that means if you like Discover's US-based support team or their no annual fee credit cards, those things may start to change. Now, before we move on to the second point, let me ask you something. Do you actually understand how this merger could affect your credit decisions in the future? I put together a free credit guide that breaks down the exact steps that you can do right now to start increasing your credit score. And yes, in this economy, okay? Especially with banks making moves like this. Go ahead and scan the QR code right there on your screen or click the link in the description below to go ahead and get your free copy. Now let's get back to the list.
If you have a Capital One card, this could impact how you use your card internationally. So I go back to that payment network system. Discover isn't as widely accepted internationally as a Visa or MasterCard. So that change could impact things. You are going to have more access to locations. Capital One has a lot more physical locations than Discover. Both of them have very wide ATM networks. So now you would be able to visit all of those different places.
Number 2. You'll likely see changes in approval odds. Now, for those that don't know, Capital One has different approval standards than Discover Card, okay? For example, Discover was known for approving applicants with average to above average credit scores, okay? And that was even as low as a 640 FICO score. But here's the thing, Capital One, they're a little bit different. They use internal risk models, and sometimes they deny people even with higher credit scores, especially if you've burned them in the last 12 to 18 months. So if you're thinking of applying for a Discover card right now, hoping for the same leniency, you might be disappointed. In fact, this is where most people lose. They apply with old expectations under a new system. The same thing goes when you guys are applying for, let's say, credit cards based on some things that you learned last year. Things change all the time, okay? But this next change, this is almost something cardholders won't realize until it hits their wallet.
If you have a Capital One card, this could impact how you use your card internationally. So I go back to that payment network system. Discover isn't as widely accepted internationally as a Visa or MasterCard. So that change could impact things. You are going to have more access to locations. Capital One has a lot more physical locations than Discover. Both of them have very wide ATM networks. So now you would be able to visit all of those different places.
Number 3, your interest rates could go up. Now, Capital One has a reputation for higher APRs than Discover Card. Most people know that. For example, a Discover It card may have offered 17.99% APR, but Capital One versions of similar cards often sit in that 23 to like 29% range, okay? That means you could keep the same card, but then over time suddenly start paying way more interest if you decide to carry a balance. And because this merger affects all Discover credit card accounts, you won't even need to reapply to feel the impact. The terms can simply change, and yes, legally, okay? So don't wait for that "we've updated our terms" email. Start checking your interest rates right now. Now, coming up next, why this merger could put you on hold longer than ever before. Number 4, and you all won't like this one, customer service may suffer. Now, Discover has been rated one of the top credit card companies for customer satisfaction. Now, that's largely because of their US based reps and their fast service. Now, Capital One, not so much, okay? Now, after this merger, there's a high chance that Discover's call center model will get absorbed or downsized. That also means when you call them, it could be longer wait times. There could be fewer perks. And of course, offshore support. Now, it's not a bad thing, but sometimes it's kind of hard to understand when there's different accents and different things of that sort. But it's really up to you. And let's be honest, when your account has been charged twice or flagged for fraud, you don't want to be bounced around like 5 times before getting help, okay? But what about your credit limit? That's where this story gets even more serious.
Something I always focus on, rewards programs. Okay, how were
are you a
these
points
two?
girl?
Oh, girl, I am such a points girl. That's how I travel. But how are these two programs going to combine from Discover and Capital One? Are the miles going to be 1-to-1? You could also see interest rates and fees
That's what I
go
was
up.
waiting for. Oh, go
Yes.
up. I thought you were going to say go down.
It could be either. So when you have two companies that come together and they make a really big company, there's less competition. So traditionally, you see interest rates go up and fees go up. But in this case, analysts that I've talked to have argued that because they're going to try and take a run, as you said, at JP Morgan Chase and Amex, they're going to want to try and give you better deals, entice you in the door. So that's kind of the piece to watch which way it goes.
And number 5, your credit limit could be reevaluated, okay? Now, here's the thing. When banks merge, one of the first things that they do is consolidate customer risk, okay? Let me translate that if you're not sure how this whole process works. If Capital One, if they see that you have a Discover card with a $10,000 limit, now this is just an example, and this may or may not happen, okay? But let's just say they see you with that Discover card that has a $10,000 limit, and then they also see you with a Capital One card with a $7,000 limit. They might reduce one of those limits to minimize their risk. Why? Because they don't know your profile. Now, again, chances are really up in the air, but we've seen this happen in the past with different banks merging as well, okay? Or even worse, this can hurt your credit utilization and drop your credit score. For example, if you've got $3,000 in balances across these credit cards and you suddenly lose $5,000 in your credit limit, your utilization is going to skyrocket and your credit score is going to take a hit. So check your credit limits and watch out for notifications. Now listen, this merger is going to affect millions of people, okay? Some will benefit, most will miss the fine print, but you don't have to be caught off guard, okay? All you have to do is keep your eyes on these few things. Number 1, check your APR. Number 2, check your credit limits. They may or may not change, but keep an eye on them just to make sure that they don't. Number 3 is going to be your approval odds before you're applying. That might change. Number 4, your credit card rewards. And of course, number 5 is going to be your customer service access. All right. If you haven't already, go ahead and grab that free credit guide I talked about before. The link is in the description below. And listen, if you like videos like this, you're most definitely going to love the next one. I'll see you there.